Good morning, good afternoon, good evening, everyone, and welcome to today's session, Evolution of Global Cryptocurrency Ecosystem, Blockchain-Based Forensic Accounting, and Web3 Compliance. Crypto often grabs headlines for market instability and meme coins, but today we are diving deeper, exploring the true value behind the noise. We'll examine how forensic accounting, transaction monitoring, and compliance frameworks are evolving in a world where decentralization is the new norm and regulators are racing to keep pace. So before we get started, let me introduce our powerhouse panel, three experts at the forefront of regulatory evolution, crypto innovation, and compliance transformation. Together, they bring over 5 decades of experience spanning public service, global banking, blockchain analytics, and forensic investigations. So let's meet the experts. First up, we have Archana Bay, CEO and founder of Porter Strategies. Archana is a trailblazer at the crossroads of financial crime compliance, national security, and innovation. With nearly 25 years of leadership experience, including at the CIA and OFAC, she has led critical programs targeting narcotics trafficking and transnational crime. Her tenure at HSBC US Regional Head of Sanctions investigations involved close collaboration with regulators like the Fed Reserves and FinCEN. As a consultant with K2 Integrity, she advised global financial institutions and fintechs on sanctions and AML programs. I would say everything that comes under the financial crime umbrella. So today, Archana leads Porter Strategies, helping clients develop resilient risk-informed frameworks for sanctions compliance and crypto risks. She also holds an MBA from Johns Hopkins. When it comes to intelligence grade precision in crypto compliance, Archana literally wrote the playbook for the entire financial crime. Joining her, we have Robert Triano, BAC officer, East West Bank. Robert brings a strategic regulatory mindset shaped by over a decade at the Fed Reserve Bank and OCC, where he served as lead BSA examiner and fiduciary risk manager. He transitioned into a private sector, spearheading crypto asset risk strategies at MasterCard with global oversight across APAC, EMEA, and North America. He's held senior roles at UMB Financial Corporation and First National Bank of Omaha. Currently, as a BSc officer at East West Bank, Rob oversees comprehensive financial crime risk management with multiple certifications in crypto compliance and fintech risk. He is known for bridging innovation and enforcement, often with clarity and the touch of humor. Lastly, joining, we have Prasenjit Mukherjee, who is a blockchain analytics and risk leader. He offers a sharp analytic perspective on blockchain compliance, specializing in transaction monitoring, forensic accounting, and enterprise risk management. His experience expands traditional banking and crypto native firms, uniquely connecting complex on chain behaviors to regulatory demands. He has strengthened investigative models for evolving financial crime typologies and guided teams to transform blockchain data into auditable narratives, whether tackling transaction data discrepancies or decoding cross-chain mixer activity. Prasanjit charts a clear path through on-chain complexities. He's the vice president for compliance delivery for Anaptyss. So today we have, as a whole, I would say, intelligence, regulation, innovation, and investigation all at one table. So let's explore how the crypto ecosystem is evolving and how compliance teams can not just keep pace but lead. So great to meet all of you. Let's set the stage and let's kick off with a foundational question for you, Archana. So, Archana, as you have witnessed crypto grow from fringe interest to a mainstream phenomena, from payments to CBDCs to investments, how has the landscape transformed for over the last 3 to 5 years, and where is it headed?
Everyone can hear me?
Yes, sir. Yes,
Excellent.
Yes, sir.
Thank you so much. And thank you so much to Anaptyss for the opportunity to participate in this panel. I'm really excited to be here today with you, Tasneem, also with Robert and Prasenjit. To answer your question, the global crypto landscape has definitely undergone significant transformation over the past 3 to 5 years. There's a signal that there's been a shift from speculative enthusiasm to more structured, institutional, policy driven adoption. And in my view, there are 5 major areas of evolution. The first of those is institutionalization and regulation. Crypto used to be largely retail driven with minimal oversight. Now we're seeing major financial institutions like Fidelity, for example, that are actually offering crypto products. You have maturity of regulatory frameworks like MiCA in the EU, the markets in crypto assets, and also Security Exchange Commission, SEC, here in the United States, as well as the Commodity Futures Trading Commission, the CFTC, having enforcement actions inside the United States. Central banks are actively exploring central bank digital currencies, as you noted in the question. So the signal here really is that crypto is becoming part of the formal financial system with clearer rules, greater institutional trust. The future of crypto, in my view, is going to be defined with a dual trajectory of innovation and regulation. As blockchain technology continues to disrupt traditional finance, as we're seeing every day, the need for secure, compliant, and transparent systems is only going to grow. Cryptocurrencies, as you noted, have moved from the fringes of finance into the mainstream. Major financial institutions, fintechs, central banks, they're all exploring or implementing blockchain based solutions. CBDCs, in particular, have gained traction globally. We're seeing a signal and a shift towards sovereign backed digital assets that are aiming to combine benefits of crypto with the stability of fiat currency. We're seeing a major shift in regulatory frameworks, like we mentioned, the US, the EU, parts of Asia. We're also
Mhm.
seeing authorities, global standard setters like the FATF, the Financial Action Task Force, that are issuing guidance or issued guidance a few years ago, really, for virtual assets providers. And we are seeing that increase in enforcement actions. So the signals really are a global push towards harmonizing compliance standards, especially for anti-money laundering and countering the financing of terrorism, AML, CFT, and sanctions compliance. The second major area that I'm seeing is in cross-border payments and financial inclusion. So previously, crypto was seen as a niche or speculative asset. Now we're seeing stable coins and blockchain rails being used for real-time cross-border settlements, completely revolutionizing the market. There's emerging markets, Nigeria, the Philippines, El Salvador, who are actually leveraging crypto for remittances and financial access. So that's the financial inclusion playing a part. So the signal here is that blockchain is proving utility in solving real-world frictions in global finance. Crypto is increasingly viewed through a political lens, from sanctions evasion, cross-border capital flows. Digital assets are shaping how states and non-state actors are interacting with the global financial system. And this is really underscoring the importance of risk assessments related to economic sanctions, for example. The third area is the rise in central bank digital currencies, as you noted this name in the question. They used to be theoretical, conceptual. Now you have over 130 countries that are exploring CBDCs. China's digital yuan is in advanced pilot stages, for example. And these currencies are being designed to coexist with private crypto and stablecoins. So the signal here really is that governments are embracing digital currency infrastructure to modernize monetary systems and retain their control over digital finance. The fourth area is in smart contracts and decentralized finance, or DeFi evolution. So previously, DeFi was experimental and considered high risk. Now we're seeing DeFi protocols that are integrating with TradFi, or traditional finance. Institutions are exploring tokenized assets, on-chain compliance, and programmable finance. So the signal here is that the programmability of money is becoming a core feature of next gen financial systems. And then finally, you have security, compliance, and surveillance. Previously, when we talked about crypto, we were talking about anonymity and decentralization as their core values. But now, tools like blockchain and AI driven transaction monitoring and KYC AML compliance are the standard. Governments are cracking down on illicit use and also at the same time supporting compliant innovation. So the signal here really is privacy and decentralization are being balanced with accountability and security. So I see us headed in the direction where we have a convergence of traditional finance and crypto. We're already there. A tokenization of real world assets like real estate, bonds, and art, and interoperability between blockchains and legacy systems. And then using AI and blockchain synergies for fraud detection, smart contract auditing, and autonomous finance. Thank you.
Fascinating insights, Archana. It's just like watching the birth of a parallel financial universe with regulators trying to govern it in real time. So, Rob,
Yes.
I would like to know about your perspective if blockchain is reshaping how we move money. I mean, verify data, sign contracts. How has this impacted the regulators and traditional institutions regarding compliance and consumer protection?
So I'll start by echoing, thank you for having me. I appreciate the opportunity to be here. Thank you for everyone who's joining. And,
Welcome.
I think I'll maybe frame my initial response to drive the rest of my responses during this session. Right, I work for a traditional financial institution right now. We're not actively engaged in this space. I think I joined more from my prior experience working at a blockchain analytic and large payments firm, and on the regulatory side, working in some of the early stage novel banking at the Federal Reserve and a little bit at the OCC. So I'll try to share those insights, but did want to be somewhat transparent that our institution, like many institutions, we're really thinking about this from the perspective of how are we impacted either directly, indirectly, twice removed, even 3 times removed. So to your question here about how blockchain and virtual assets are really impacting markets and changing mechanisms of payments, right? I think, Archana, I agree with everything you just said there, right? It's from our perspective, we're a financial institution that operates in both Asia and the United States, and one of our core philosophies is bridging businesses and the flow of commerce between the two continents. So we have to be thinking about what is going on with our clients, what are going on with their clients, how are they evolving and changing, right? Whether it's trade finance, cross-border payments, the flow of goods across these continents, heavy trade interactions. That all comes with the movement of money. And in traditional financial architectures or frameworks, right, that can typically take a long period of time. T+2 is considered fast, all the way up to T+7. And right now you're getting into setups, and Archana, I think you mentioned, right, or alluded to fiat backed. So thinking stable coins and how money can be quickly moved with somewhat, a secure, I guess you can say, secure backing, or at least a less volatile aspect of the
Right.
pricing. Right, that's really interesting right now, and I think banks are paying very close attention to that. Traditional banks and traditional financial institutions to try to either learn from that or potentially leverage that as they work with clients across different continents. So really, for me, I think things are always changing, and we're constantly talking to our clients. I think a lot of banks are constantly talking to their clients and figuring out what they're involved in, how they're potentially interacting or engaging in the virtual asset space or the Web3 space, blockchain space, any number of things that could be, 2 or 3 times removed from a traditional financial institution. So I think for us and for many of my peers, right, we're asking a lot of questions. We're constantly diving in and understanding what's the impact to international payments, trade finance, and right, really a lot of the players that are similar size to us, right? I think we're trying to see what's going on in the market and learn from maybe some of those bigger players or even the smaller players that are more heavily engaged. But I'll stop there, Asmin, and I think let you move on to the next question.
Thank you, Robert. Great insight, especially on the evolving regulatory mindset from traditional banking to a dynamic banking. So that's like a change of the worlds altogether. So now coming to Prasanjit, so I would like to zoom into the data sides of things. So Prasanjit, as blockchain analytics becomes essential to transaction monitoring, how are compliance teams leveraging these tools differently? I mean, what shifts are you seeing in the risk classification or the alert models when we see in the current dynamic changes?
Sure. First of all, thank you so much, Tasneem, for the invitation. Second, it's truly an honor to be on the same call with Rob and Archana. It's truly an honor, being on the same panel as you, both of you. Um, a little bit about my background, Tasneem, considering, I have been a consultant for the, greater part of the last, 10 years or so. Okay. I have experienced the shift and the change that in general, overall, the world economy has also, seen in terms of the disruption, which is a positive disruption actually, about the blockchain that has come into being. Right. Now, from
Right.
that perspective, there are a lot of these changes that, as a overall ecosystem, the traditional financial system is actually, understanding and evolving with the decentralized financial system. Right. uh, Compliance teams as a whole actually have moved beyond just the flagging of suspicious transaction based on volume or where the origins of the transactions are, right? They have moved beyond that. It's about how we can integrate on-chain behavioral as an analytical tool, right? Basically, the
Right.
objective is to find out more or better nuanced patterns which evolve overall in terms of the transactions that go through. So things like cross-chain mixer, right? Transaction timing discrepancies, right? Layering tactics that at present are going on, right? These are all things that in the traditional tools they are right now missing. um they are also evolving. Why should I lie about it, right? There are new products which are coming across every now and then, right? From all
Right.
different spheres. Okay, so from that perspective, what has actually happened or what has pushed from the back end, right, is basically the risk classification of the models, right, which have basically constantly been evolving in the last decade. Okay, to
Mhm.
include the broader array of the data points. Okay, the whole objective is to include the token types, the wallet relationships, right, the social signals, right, even from the decentralized communities, how they are all functioning together to bring those data risk models together has basically generated this evolved version of finding how transactions can be categorized in a way which is more comprehensible in total, right? So alerts are now more contextual, prioritizing actionable intelligence over just simply noise, right? Which actually helps the compliance team focus on resources more effectively, right? So overall nowadays the blockchain analytical tools which are available in the market, they are ensuring that the focus of the teams who are working these compliance or doing this compliance activity are doing it much more in a focused manner. Thank you.
Absolutely. So I must say, everyone must agree that from macro trends to micro signals, compliance teams are part data scientists and part detectives now. So that would be something where we have seen a lot of investigators coming up with different patterns and behaviors where they're trying to use different combinations to identify those bad guys, right? So now coming back to you, Arshna, when we talk about the frameworks and the regulators, so like Mika and the travel rules are accelerating change. So what AML capabilities should crypto native firms prioritize to stay ahead of regulatory scrutiny? I mean, this should be something that could help you guide on the different frameworks that are favorable in terms of the regulators, because they would love to see a lot of frameworks coming up.
Definitely, yes. And when you look at the convergence of AI and machine learning and blockchain analytics, and I work with quite a few firms, and we do a lot of AI enablement here at Porter Strategies. We're definitely looking at how to do this in a strategic way where you have strategic deployment, strategic governance, and then strategic integration tools into the broader compliance frameworks, right? So from that and using that as the sort of foundation, there are five core themes for leveraging these technologies when we're looking at this rapidly evolving regulatory landscape. Here in the United States, we're going to start seeing a lot more. Every day, there's more discussion in Congress about moving forward certain laws and regulations, and so I think the 5 major areas that I would want to focus on is number one, we have to be able to explain to our regulators and align all of our tools and models in a way that's explainable and auditable. Okay, that's extremely important when we're working with regulators. I think Rob will attest to that, right? As with your experiences as a regulator, they're expecting us to be transparent in our decision making, and that's especially the case when we're using AI for risk scoring or transaction monitoring. We have to make sure that any models that we create are interpretable by compliance officers and then defensible in audits or enforcement actions, right? So that's incredibly important as well. We have an evolving regulatory landscape, and we have to make sure that the regulators are going to be able to interpret and understand, and then our compliance officers need to be able to understand the models as well. Secondly, we want to be able to integrate on-chain and off-chain intelligence, right? So combining blockchain analytics with traditional data sources for a more holistic risk view. So the on-chain data is going to provide us with transparency. They're going to provide us, but they won't be able to provide us with the contextual understanding because that often can require off-chain information. So IP addresses, device fingerprints, KYC records. And then cross-chain analytics are also essential for tracing funds. Earlier, Prasenjit talked about mixers. We have bridges, wrapped assets. These are increasingly being used to obfuscate illicit flows. So we want to be able to build fusion intelligence models that are going to integrate structured and unstructured data across domains. Third, I would say we want to adopt a risk-based adaptive compliance architecture. So we want to move beyond static rules to dynamic risk-based controls. And I think when you opened this name, you talked about how this is a dynamic landscape. And so I think we have to think of all of our tools and technology as dealing with a very dynamic and ever-changing cryptocurrency and blockchain, right? So the AI driven systems can prioritize alerts, they can detect emerging typologies, and they can adapt to new threats in real time. And this is, again, especially critical in decentralized finance and Web3 environments because transaction velocity and complexity are far outpacing our traditional compliance systems. So we want to have modular compliance stacks that are evolving with the ecosystem and the regulatory landscape. So being able to interoperate and be able to be changed and modified quickly to adapt. The fourth area would be to embed compliance into the protocol and product design. Always a great idea when you're designing a product, you don't want to have your compliance as an afterthought. It has to be built into the design principle if you're going to be able to successfully navigate regulatory landscape that we're in. So smart contracts, for example, can include KYC gating, sanction screening, and transaction risk scoring as embedded logic as you're building the product. Wallets and decentralized apps can integrate into real-time risk indicators and user credential verification using decentralized identity frameworks. So this approach is really shifting from a reactive function to a proactive, programmable capability. So again, being able to really change and shift as our requirements change. And then finally, you really have to invest in talent and cross-functional collaborations. So compliance teams could, for example, include data scientists, blockchain analysts, and regulatory experts who can then collaborate across these disciplines. And then training programs should be focused on crypto forensics, AI ethics, and then regulatory fluency, understanding the regulations. And you want to be able to build these interdisciplinary compliance teams that are ready to take on the future state and adapt to all of the emerging changes within the regulatory environment. So if you really want to navigate these complexities, then you really have to treat AI and machine learning and blockchain analytics not as a silver bullet, but strategic enablers. We really want to build systems that are intelligent, interoperable, and accountable so that you can empower people to then bridge that gap between technology and trust. Thank you.
Thanks, Archana. You have outlined the regulatory expectations clearly, with a checklist, and truly I understand this is not just the AI, rather it's an augmented intelligence that comes in with the AI plus the human intelligence, which is partnered through the, I would say, talent that we secure in terms of the job that needs to be delivered. So now as you did talk about the tools, AI-driven or maybe risk scoring or cross-chain analytics. Now let's shift to the tools enabling these programs to drive these strategies that we need to have in place for those bad actors who are just going, or I would say they're running way ahead of us. So with advanced AI-driven risk scoring and cross-chain analytics, how do firms avoid tech overload and focus on meaningful risk mitigation? Rob, I understand you come from traditional banking, and when you look at that, I would like to have your opinion on the risk scoring and how things change when it comes to the cross-chain analytics, and how do we avoid those tech overloads for the risk mitigation?
Yeah, no, it's and the prior response, right, was a perfect setup for this. I think everything covered there, strategic governance, move to centralization, auditability, right? These are all critical factors that need to exist. And I think having been in that blockchain analytics circuit and really hearing the narratives, right, of the various technology players, right, it
Right.
seemed to be right that every individual entity felt like they could solve everybody's problems or everybody's challenges, when that's simply not the case, right? You really have to think about this from the perspective of, right, if I'm a traditional financial institution or I'm one of those large centralized virtual asset players, or even a little bit smaller in the virtual asset space, but how am I operating? What's my operating model? Identifying what my inherent risks are, and really determining how do I mitigate those to the best extent that I possibly can, right? So whether I'm regulated or unregulated, to me is irrelevant, because the risks are what they are. And right, if the virtual asset market and the players in the virtual asset market have been saying for years, we want clearer regulation, we want to move in this direction. If that's really true, right, then we can't have players in the ecosystem ignoring that, right? So the way I think about it is it's not too dissimilar from typical FATF approaches and various anti-money laundering, information security, et cetera, frameworks in various jurisdictions, not just here in the US. But how am I identifying relevant risks? And then once I identify those relevant risks, what are the channels in which the funds can be moved, right? So if I'm a traditional financial institution and I'm exposed to large centralized virtual asset players or even mid-size virtual asset players, whether it's stablecoins or retail exchanges or liquidity providers or whatever it may be, right? I should be asking questions like how are the funds being moved? What virtual assets are being utilized, right? Is it BTC? Is it ETH? Is it something different? What blockchains could these transactions be flowing through or transacting upon? And what tools are applicable to me, right? Not just going to market and saying, hey, this is the best tool out there, I'm just going to purchase this, or these are the two best tools out there, I'm going to purchase this. But then you realize you don't have a functionality that is really critical to your inherent risk profile, or you don't have a particular blockchain covered, or you don't have the ability to catch cross-chain activities or bridge activities. So I think that's where I always start with this. What are you as an organization? What are your risks? How can funds move and flow? And then what tools or what combination of tools? Because I really agree with that, right? No single tool will solve every challenge. And combination of tools, and really, I think the emerging aspect of this is right, like both of your entities working with different players in the market to help them organize all of that intelligence to make good risk-based decisions, identify risk. That's becoming even more prevalent than a few years ago when it was just all about which blockchain analytic tool was popping up, right? And what they could do. Now it's more about how do you make sense of open source information, proprietary information, AI-driven information to actually make your most intelligent decision that you possibly can. So I think that's how a lot of the financial institutions and big centralized players are thinking, right? How do we build a framework that's repeatable, auditable, consistent, and not suggesting that any 1, 2, 3 technologies are going to solve all of our challenges. It's really, there's always going to be a human investigative intelligence component to this, right? And I think if people lose sight of that, that's when they get exposed to being overly reliant, right, on one piece of technology.
Right. Absolutely, Rob, because if you talk about the technology, that's not the only good thing that we have. It's also about the people who are behind it, creating, building it, and trying to combat those, I would say, fraud activities that we have and the different type of risk emerging typologies that we see nowadays. So, I mean, it's not just the technology, but yes, we do hear a lot of AI and technology together. And there is a lot of hard work put by the people who are behind those technologies, developing them, or maybe doing the research on the behavioral trends and understanding those areas and then getting into that stuff. I mean, thank you so much, Rob, just briefing about it. So now I just would like to just take an advice from, or I would say an opinion from you, Prasanjeet, to understand when there is a lot of technology that is coming in. I would like to understand how does this play out on the ground? I mean, financial crime in crypto evolves rapidly. What new typologies have you observed, and what advice do you have for traditional banks trying to keep pace with it?
Sure, Tasneem. So one thing we need to understand here, right? We need to take a step back, and understand that basically for the traditional finance, right? What the fraudsters and the scamsters tried, right? Those have already been counteracted by the different compliance team globally, right? Considering the crypto market is the new emerging segment, right? Even the bad actors have opportunity here to try new ways or innovative ways to do the as in defraud people or basically do the run the scams, right?
Right.
The interesting part is that I can definitely vouch as a consultant that we see a lot of these also now originate from the crypto or the blockchain side, right? And they do translate over to the traditional finance is what happens, right?
Absolutely.
So because of that, the shift is nowadays that most of these traditional, like I'm sure even Robert, on his side would be keeping constant tabs as to what are the new emerging trends, probably first on the crypto side, right, of the
Right.
fraud, because they are the first ones to emerge nowadays, right? So those are the new emerging patterns which everyone on the compliance side follows, is what happens, right? So we have seen an uptick in sophisticated typologies like pig butchering scam. Fancy word, I know, but but where the fact is that the victim is actually groomed, right? You do not run the scam immediately, is what you don't do. You feed a little bit to the victim little by little, making sure that the victim is first comfortable with you. Even though you are a fraudster, you have made sure that the victim is comfortable. The victim probably feels the victim knows you very well, in and out, everything about you, right? Probably, there are comments, where the victims have come back and said that, felt more of a family member than and a friend, is what they have come back and given as testimonials, right? The the ransomware payments, that cross multiple chains, and the decentralized finance exploits, involving flash loans and liquidity pool manipulation. There are all these nuances which come across every now and then. And to be honest with you, being a compliance expert myself, even I'm learning every day there is something new that is coming up, right? Can't go to sleep without at least reading 30 minutes, on the internet as to what is new in the market, right?
Right.
And I think the smile of on Archana and Rob's face also tells a lot, right? Because that is pretty much the same case everywhere, right? So that being said, there is also a lot now, specifically, which is intertwined between the traditional financial system and the crypto side, right? The fact of the matter is, lot of customers, specifically on the retail side, lot of customers on the corporate side, who are basically now the new age corporates which are coming up, right? They need, the money to be transferred faster. They can't be dependent on the traditional finance, switching over, the amount from one geolocation to another geolocation, right? And at a global scale, if we look at it, whether it be EU, whether it be US, all the major, governments of the world are now recognizing the crypto side of finance, right? So that's a ever evolving segment between both traditional finance and the crypto side. So there is a need for traditional banks, right, where they want to embrace the blockchain analytical tool, something that Robert mentioned, and I want to double tap on that, right, where he said that it is not one single tool that will solve all the problems, right? It has to be a combination of tools which will eventually evolve and emerge as the standard risk based approach that we every compliance individual talks about, right? A risk based approach. So there has to be a combination of tools that have to be implemented, right? It's critical that there has to be a hybrid team combination that needs to be built, right, from every traditional financial crime expert, right, with crypto native skills to decode these complex schemes and respond faster. That's the end objective at the end of the day, right? So yeah, that's it from my side.
So, in a nutshell, Prasandeep, from pig butchering scams, ransomware, and romance scams, it's no longer your typical fraud playbook. I mean, it keeps you up awake all night just to think about how forensics need to define their trends and need to understand how scamsters are trying to, just get away with the new ideas and innovation. Because innovation these days is a two-way. It's not just in the industry where we are trying to combat those fraudsters, rather, even they are using innovative ways to get away from regulatory compliance. So now moving into the forensics part where we need to discuss about the blockchain investigations, which is one of the biggest concerns and topics that we have been addressing in the financial crime industry. Robert, as you did talk about how traditional banking industry has been taking up certain challenges and they are coming up with certain, I would say, risk-based approach. They are using tools and everything. I would like to understand what are the key challenges that they are facing, maybe like the cross-chain tracing and the wrapped assets. So what keeps them up at night? I mean, what is it that they're most feared about, or what is it that their main basic pain area or the challenge that they're facing these days?
Sure, sure. I think I'll take this in a couple of different ways, right?
Mhm.
One, to start with what was just talked about with the various frauds and scams, right? And thinking about, as a traditional financial institution, the root cause of all this is vulnerability, right? It's text
Right.
messages, it's emails, it's WeChats, it's WhatsApps. It's all these communications targeting different individuals, whether it's malicious and you've got a link that is looking to take your information, or if it's some type of relationship development to then ease the victim into willingly sending funds. So for, I do know that some of the folks on the call are from traditional financial institutions, financial technology companies, and a couple of the larger centralized players in the virtual asset space, right? So I think when I talk to a lot of our peers, it's constant communication, constantly educating not just our employees, but trying to educate our clients in a respectful way and meeting them at their medium. So what I mean by that is elderly and vulnerable persons, right? They're typically accustomed to interacting in person, or they want some type of hard material. So as we think about how do we protect our clients of elderly populations and vulnerable populations, how can we continue to communicate what's going on with them, right? So that for traditional banks tends to be in branch, some type of hard, snail mail type stuff. But then how do we get to other populations of the client base? Is it on our website? Is it through our social media? Is it through some type of quick hit video? A 60-second or a 90-second, don't do this, watch out for this. This is what we're seeing. We've talked to many of our peers, and I work heavily with our fraud group internally to try to figure out how do we educate, how do we constantly get information out there to protect our clients, and then what do we look for, right? So exactly the typologies and trying to figure out what would be the connected pattern or what would be a combination of factors that draw our attention, right? And I think a lot of financial institutions are talking more. I know I talk with my peer institutions, and something we think about very actively is why not get a blockchain analytic license for a small fee, right? So you can actually have a little bit of visibility or teach yourself how to do some work on open source training tools, tracing tools, so that you can determine not only what's going on in the fiat activities, but you can maybe start to see patterns. Hey, my clients are starting to off ramp their fiat over to, I won't use names, but you insert whatever VASP you want that might be partially doing virtual asset and partially doing traditional investments and banking. And what's that pattern? And I know in the United States we have voluntary information sharing, so something we're very actively thinking about, and I know a lot of our peers are thinking about, how do we even go a step further to protect our clients, consumer protection? How do we get out in front and maybe leverage 314B here in the United States to interact with those large centralized players that are also voluntarily signed up, right? Hey, we see these typologies, we see this activity, we see the movement of funds over to you. Can you tell us a couple things about that particular transaction, right? Because most of those don't exist on a blockchain. It's really account to account because it's not registering for us to be able to trace in many cases. So tell us about this activity. What's the destination of the funds, right? And then we can maybe use some of that intelligence to talk with our client to see if they've maybe been defrauded. So to me, that's a simple way for traditional financial institutions and large centralized players to combat really the simple root causes of most of the frauds and scams, which is just through text messages and messages and emails. But the more complicated aspects of it, right? The cross-chain bridges, the very rapid movement of funds. I always think back, and what I mentioned before was, how do you get good, strong, investigative mindsets to really dig into that, right? One of the most intelligent tracers that I think I worked with in my prior life was, I think he was 17 years old, right? And that was a difficult thing to fit into a global payments company. Hey, how does a 17-year-old fit into, the structure of this global giant? But somebody who can use various tools and very quickly piece things together, who can maybe write some code to do a little bit of RPA to make things a little bit quicker. But really thinking about, again, what we all mentioned before, which is how do you make sense of those various data points and then have people or work with a third-party firm that can help point you in the right direction. So that's I think the best way I can answer that is, right, we're thinking about it kind of simplistically in the traditional financial institution space. How can we just continue to protect our clients? But then I know as it starts to get a little bit further away from TradFi, how do you make sense of complex information, and how do you take advantage of either firms or highly intelligent investigators who can connect those dots for you?
Thank you, Robert. And hearing you out on the challenges, it seems like tracking funds across the chains feels like being in an outer space. You need the right telescope and a constantly updated map just to float through. I mean, you need to think like them and just need to try and figure out what is it. I mean, stay a step ahead to understand their mindset. And then they guide you as to what we need to build and create to combat even their doings, what they've been doing. So I understand definitely it's a dynamic thing, even investigation, the tools, and the combat that we need to fight throughout. Thank you, Robert. So now let's move to an area where fraud investigations have been something that brings us back to area where things need to be transformed in terms of fraud investigation. So, Prasanjit, that you did talk about the investigation that you did and different types of risk typologies. So, I would like to understand, how has blockchain transformed fraud investigations? What's the advantage of having immutable data at your fingertips, just to understand that, yes, what is it that comes your way in terms of the steps or the things that we are seeing in the market in terms of the upcoming trends or the existing trends that you see throughout?
Yeah, absolutely the same. So basically, when you talk about immutable data, right, and adaptation of the blockchain technology, right, overall, right, um, there is an unprecedented, transparency through, immutable transaction records, which happen, in an audited and a structured manner end to end, within a blockchain, right? That's the basic nature of a blockchain, right? The objective is that from the beginning of the blockchain creation till date, whatever the transactions have happened, blockchain basically carries all that data together, which is pretty much an auditor's delight, right? But at the same time, what basically goes against, and I'll also highlight that, right? What actually goes against is basically the offboarding that happens from blockchain to traditional finance, right? What basically does not again work is anonymity, right? Many times, the mixers basically are intentionally used, right, to basically hide the origin of the fund, right? Now those kind of game changing aspects, right, have to be brought into the forensic accounting part of it that we work on a day-to-day basis, right? So unlike and the traditional systems in terms of how the tools traditionally have worked, right, where logs were altered or lost, right? Blockchain does not have that ability, right? So basically a auditor will always like to see information end to end. Where did it start, where did it end, where are we now, and how is it going further, right? Kind of a tamper proof audit trail, right? So this drastically reduces the investigation time and increases the evidentiary confidence, that any and every compliance team member, manager, auditor, everyone basically across the board feels, right? um there are aspects that need to be carefully be catered to, right? So as long as different blockchain connectivity is done appropriately, right? As long as the information is not lost in the mixers or the tumblers which are nowadays used, right? As long as the on chain to off chain and off chain to on chain transfers are tracked properly, right? So these are the critical junctures. If they are managed well, uh, this is actually an auditor's paradise or delight place to work, to be honest with you. So that's my two
So,
cents.
so literally, the chain of custody is now literally a chain, I would say, if you just look at the
Yes.
information that we share. So now here,
Yes.
Arshana, considering your experience and you've worked with CIA and with the national security, so I'm curious to know, with AI and machine learning advancing crypto forensics, where should human judgment still lead? I mean, especially in terms of interpreting complex signals. So that's where I would understand what your expertise and your advice would be.
Yeah, thanks, Tasneem. And I think a lot of the discussion today has actually been around the importance of the human. Interestingly enough, I was at an event, an intelligence community event, probably about 2 months ago, and they're now building these teams of AI and human together. How are we going to conduct, intelligence and investigations and analysis? And so it's a very timely question and very much relevant, not just in the intelligence community here in the US, but also I think across the world, across different agencies. It's absolutely an important element. It's going to be important to financial institutions as well. So yes, AI is offering unprecedented speed, scale, precision, and it's able to detect suspicious activities across blockchain networks. much quicker than a human could do so. But that's a great enabler, but it's definitely not a substitute for human judgment in my view, especially when you're talking about high stakes investigations involving sanctions or fraud or any national security risk. So there's definitely something that I would say is a clear division of labor between machines and investigators, kind of in line with what Rob mentioned earlier. The human element is critical. So where is automation going to provide us with the best possible outcomes? Pattern recognition. We know that AI is able to recognize patterns at scale, analyze millions of transactions in real time, and maybe it's going to be billions, right? Because AI is moving very quickly. The advancements in technology are moving very quickly. So humans can't analyze millions of transactions in real time and give you a response right away, but AI can do that, detecting anomalies and behavioral patterns across wallets and chains. So kind of in line with what Prasenjit was saying earlier in terms of recognizing patterns on chain. So that's something that AI can definitely assist with, and looking at the different typologies, layering, structuring, and usage of mixers, right, that we talked about earlier. So this is really valuable when you're talking about DeFi and large transactional volumes and more complexity than what our traditional banking systems, which are human enabled, can offer. Also, AI is something we could use AI when it comes to risk scoring and prioritizations, because these automated systems that have that enablement can assign dynamic risk scores across to different wallets and transactions. So that's something else Prasenjit had mentioned earlier in terms of assigning risk scores. And they can also prioritize alerts based on the severity and the typology that they're discovering, right, throughout their analysis. And then it's so important when it comes to compliance teams and investigators that we are reducing noise. Again, a theme that arose earlier, because there's so many false positives that we have to deal with when we're, sitting in a financial institution, for example. So AI is definitely great at reducing false positives through that continuous machine learning. And then ability to actually implement AI-driven triage systems. That's definitely going to allow investigators, the humans, to focus on the most critical cases. And then last, and again, this isn't the final, because there's so many ways that AI can assist in enablement of what we're looking to do, but cross-chain and temporal analysis, so tracing asset flows across multiple blockchains, correlating those transactions over real time, and detecting coordinated activity, and then integrating, as I mentioned earlier, on-chain and off-chain data for more holistic insights is definitely a place where AI can assist. So, these are really important for the fragmented crypto ecosystem, where we're seeing illicit actors exploiting cross-chain bridges and wrapped assets like we talked about. But the human element is irreplaceable in my view, and I think probably in most people's view. There's a contextual interpretation that is not always possible by machines, because machines can't always understand geopolitical context. So, for example, sanctions evasion by state actors, right? That's something that is right. Interpreting intention behind a transaction. That definitely requires human judgment. Looking at reputational and legal implications, right? Understanding these very, laws, they vary state by state, and the law is also subject to interpretation. So human judgment is important there. The second area is strategic decision making. We need humans to determine escalation paths and enforcement actions. Rob mentioned the 314B process, for example. I think that AI can help you write your request for a 314B, but the financial institution you're sending that to is going to expect to interact with the human being to actually discuss the request and then provide the information and process the information. So yes, AI can enable, but they're going to expect a human being to be involved. Also, communicating findings to regulators and law enforcement. Regulators, law enforcement, authorities, they still want to deal with humans in the room. So we are critical in that. And then the ethical use, right? Ethical AI is a very big topic of discussion these days. So making sure that we're using this technology in the most ethical way, and we're looking at data privacy. right? We have lots of issues around that when it comes to different regulatory regimes that are trying to protect consumer data. So these are, different areas. And I think another area I would say is model oversight and governance. So the actual auditing of the AI systems that are being used, that audit should take place with a human, making sure that those systems are tuned, they're evolving to regulatory standards, and then making sure that they're interpretable and then explainable, right? As we talked about earlier, by auditors. We want to make sure that we have governance frameworks that are built by humans that are ensuring that the AI is effective and accountable. So all of that is definitely where the human being's judgment becomes very critical. We definitely want to augment any of these AI tools that we decide to deploy with human expertise. We want to look at teams, like augmented investigations teams with an AI and human element together, so that AI can assist with providing the scale and the ability to process massive amounts of data, but then human beings are able to provide the actual insights into what AI is sending back. So that's my thought on that topic. Thank you.
Thank you, Archana. And I really like the word that you've used, ethical AI, because there's a lot of information floating around NDPI, and we would see the suspicious activities being written by the AI in future, because there are a lot many things that we already feed in. But sometimes, no machine learning replaces the human sense when something just doesn't feel right. And that's the only thing when the humans do come into picture and we say, no, we need to check this thing and this needs to be fixed. So I love that factor when we talk about the augmented intelligence. It's a combination of both. It's not just the AI, because AI would be emotionless and they wouldn't have those feelings and those extra sixth sense that we did talk about.
Definitely.
So now shifting to the broader ecosystem, but Archana, considering your experience in terms of the regulatory collaboration that you've seen, and I would just like to bring this question to you, where we need to understand, when in the world of decentralized banking and the crypto assets that we see, intermediaries have vanished. There's one big question that comes in the picture. Who owns compliance? How do we ensure obligations like KYC and AML remain enforceable? So that's one thing. I know you did lay down the foundations for the strategic planning and the stuff that we do have. But when we talk about who owns compliance, can we put a blame to somebody to say, yes, in the decentralized world, we have some specific regulators for the crypto assets who can own that? Or we just depend on our regulatory, or I wouldn't say regular traditional banking regulators?
Yeah. So, when you're talking about decentralized ecosystems, the responsibility is definitely distributed. It's not absent, it's distributed. So, who are the key stakeholders in that when we're talking about a DeFi ecosystem? Well, the folks that are on the ground, who are, the innovators, they're protocol developers, they're founders. These are the folks who, we should expect to be responsible for embedding compliance logic, right, into their tools and products. As we mentioned earlier, when you're building a technology, you want to look at compliance not as an afterthought, but as part of building the product itself. So you want to build your tools to ensure that your protocols are not facilitating any illicit activity, right? So protocol developers and founders who are building these technologies, they're increasingly going to be subject to regulatory scrutiny, especially if they're retaining any governance or control functions. Other elements, so we talk about decentralized autonomous organizations, and those elements and those participants in those DAOs that are involved in the governance process. Those folks, they may bear fiduciary and legal responsibilities, right? So, they're also they're responsible for compliance as well. They're owning compliance. And the governance frameworks of those DAOs should include compliance oversight roles, risk committees. And we talked earlier about third-party compliance providers, right? There's some specialized firms that can offer compliance as a service to decentralized protocols like KYC, sanction screening, transaction monitoring, customer onboarding. So these services, these folks should also be considered part of this process and responsible for this. And their services should be modular and interoperable. As we mentioned earlier, That's their responsibility as part of having an evolving tool that can evolve with regulatory requirements. And then the users and credential issuers, they also have a responsibility here. We want the users to maintain valid credentials that are going to comply with protocol rules. And then credential issuers like KYC providers, they are there to ensure that these credentials are accurate, revocable, and auditable, right? So there's sort of, those are the four elements that I'm seeing as far as who really bears the responsibility in this new environment. But there's some challenges I think we should sort of consider because there's a lot of legal ambiguity when it comes to jurisdictions and how they're defining these different responsibilities in decentralized systems, right? So we talked about different regulatory regimes. We talked about the US, we talked about the EU, we talked about evolution in Asia of these regulations and systems. So there's lots of different viewpoints when it comes to the law in these different countries. And then looking at the United States, each state has its own laws and regulations that they can also create. So that legal ambiguity, I would say, is a challenge here when it comes to identifying and pointing to who's responsible. And then there's also technical complexity. As we've talked about just on this, in this webinar alone, we've talked about several different types of technology, AI, crypto, all the different types of, whether it's like a mixers or wallets or everything, like every one of these is a complicated technological beast. And so that requires expertise. And so being able to answer to that and say, who owns that and who's really responsible for compliance with this technology tool, that can be nuanced. And then there's also
Very
governance.
simple, I would say. I mean, looking at what you've explained, so this strikes at the philosophical core that nobody may own the compliance, but everybody is accountable in terms of all the
Yes.
aspects that we have. So
Yes.
eventually you end up owning everything.
Everyone's in it together, I would say.
That's
Yeah.
right. Thank you, Archana.
You
So
are.
now just understanding the things from the collaboration among the regulators and the exchanges. So coming back to you, Robert, in terms of your expertise and your understanding in terms of the payments and cross-border. So I'd like me to understand how effective is the cross-border collaboration among regulators, exchanges, and forensic firms? I mean, what will it take to move from tactical efforts to a unified global approach? Because we do have our traditional banking, which they have Basel committees and the regulators coming together. They do talk about it and they discuss, and then they take an approach throughout, and that is the global understanding. So I would like to understand when it comes to the cross-border collaboration for cryptocurrency. So how effective is it in terms of the exchanges that we have recently and the forensic firms?
Yeah, so I may answer this a couple of different ways. Maybe to start, what I want to mention is when you have some of these larger centralized players in the virtual asset space, I think there's a lot of misunderstanding that they're non-compliant, non-responsive, open to engaging with regulatory agencies, law enforcement agencies, intelligence agencies. Right, in many cases, that's not true. And when I see comments like that out on social media, it's a little disheartening because I think that's just misunderstanding, primarily by people that have spent the totality of their careers, maybe in financial environments, right? So when I look in the United States, I know for a fact some of the largest virtual asset centralized players are some of the most actively engaged with law enforcement agencies and regulatory agencies, right? Akin to large financial institutions that have global operations. So I want to start by saying that, right, to dispel that all virtual asset, large centralized players, right, don't cooperate. That's just simply not true. And I hope that view is diminishing now over time, but I think there still are a lot of people that think that's accurate. So across borders, I think it becomes a little bit more difficult. And Archana, you probably know this better than me, being from the intelligence community. But I think there's different motivating factors. Different jurisdictions and different regions have in the virtual asset space, maybe almost to level the playing field, right? When you think about which currencies are dominant globally, fiat currencies, right? We have different views and motivations in the United States, right? Same thing in the EU, UK, China, et cetera, right? Every jurisdiction has their own geopolitically or just pure economically motivated reasons for approaching this the way they approach it. So I think that makes it a bit difficult to engage and interact across borders, but just happen to know that multiple agencies in different jurisdictions are very actively engaged, right? So whether it's some of the cross-border tax crime groups that involve 10 to 12 different law enforcement agencies from different countries, or if it's a sub aspect of FATF or whatever it may be, I think there's more engagement than is really known. But at the same time, it can be difficult for some of those cross-border collaborations and communications, because every jurisdiction is going to have their own motivation, right, for how to approach this.
Thank you, Rob. So if simply put, coordination is catching up with innovation. I mean, just slowly and often with different languages. It can be the machine or the human, or maybe the different techniques that we've been using throughout, right? Thank you, Robert. So if you look at the traditional banking and then the transformation to the cryptocurrency and the AIs, machine learning, many things have changed in the entire blockchain, and things have been, I would say, discovered, transformed, and there are things that have been still in place where we need to explore in terms of that. So I would just like to understand, Prasenjit, from your expertise in terms of blockchain analytics, what is the status of on-chain data in legal and audit context? I would say, is it admissible and credible? And if not, then what is it that we need to change?
Sure, Tasneem. So Tasneem, specifically considering, a lot of us are from, the compliance, background, and we understand the things which are going on, right? Without taking any specific names, we all know the cases which are currently, were going on in the US court, right? There have been, major dismissals as well, because even the US as a government is wanting to take more softer stand, for in favor of basically cryptocurrencies, right? Now the fact of the matter is that all of this is possible, with the increasing acceptance of the credible evidence that overall crypto or blockchain analytical tools are able to provide, right? In terms of what all is admissible in the court, right? What all is acceptable to the auditors. These are things that eventually are evolving, right? Because from a traditional finance perspective, yes, the financial ecosystem and everything has been going on for centuries now, right? And there has been a formal structure that pretty much all of us are following, right? And with anything to blockchain, well, it's just 2011, right? So just 15 years in totality, right? So from that perspective, though the evolution is there, right? But for wider acceptance, a standardized framework for validating data integrity, timestamp verification, clear chain on custody protocols are essential, right? If these can be managed well, right, we need regulators and legal experts to collaborate on guidelines that formalize how blockchain evidence should be collected and preserved, right? Once that is achieved, I believe the basic structure is then set, or the foundation is there, right, on top of which the rest of it can be built. As of right now, I believe most of us are just progressing and taking the guidance as things come from the regulators, right? But eventually I'm more than confident that all this will be much more structured as we go along, and will definitely settle down very soon.
Thank you, Prasenjit. Now we are coming to the last leg, where we did talk about many things in terms of the transformation, information, and the changes from the traditional to the dynamic crypto banking. So from all the aspects that we did talk about, so I need to now understand from all three of you. So first I'll come back to Archana in terms of what interdisciplinary skills do we need for the next generation of compliance professionals, especially in crypto native environments, if they have to delve into this industry and they need to pull up their career. So what is it that they need to have in terms of their skills for the next generation? So any advice?
Yes, I do have some advice about this. So we talked a lot, we had a lot of abbreviations and words, related to the industry. In my view, there has to be a multilingual workforce, and not multilingual in terms of, English, Spanish, Hindi, etc. But in terms of the technology, right? They need to understand technology, they need to understand regulation, and they need to understand risks. And those are all their own languages. So as we're seeing the Web3 ecosystem evolve, and we have DeFi, we have DAOs, we have NFTs, cross-chain protocols, privacy enhancing technologies. Our traditional compliance toolkit that, Prasenjit mentioned, we've been, well versed in TradFi for so long, that toolkit is no longer going to be sufficient. The new professionals of this environment are going to have blockchain fluency, regulatory intelligence, and data-driven decision making. So that really requires an interdisciplinary talent pool that has 5 major core competencies: blockchain and Web3 literacy, which we've talked about. They need to understand how the blockchain works. They need to understand the architecture of decentralized finance platforms. And they need to have an understanding of how to use on-chain analytics tools. How are they going to interpret wallet behavior, transaction flows, risk indicators? These are all new if you're coming from a TradFi perspective. So, that's definitely a piece of literacy they're going to have. They need to understand regulatory and legal acumen. So we talked a lot about the different global frameworks. We talked about MiCA. They still need to understand FATF and FinCEN. They still need to understand the more traditional regulators who are also going to be not regulators necessarily, but those who are regulators, but also setting global standards. They're still going to need to understand sanctions regimes like OFAC, UN, EU, and they need to definitely understand privacy and data protection. That is critical because we're talking about customer data, identification data. And so things like GDPR or CCPA from California, GDPR from Europe, they're going to need to understand those sorts of regulations, and they need to be able to operate with all these overlapping regimes. The third area is data analytics and investigative skills. We talked a lot about data analytics during today's session. They're going to have to understand how to analyze large volumes of data. They'll have AI to help them, but they themselves are going to need to be able to make some interpretations themselves on-chain and off-chain, using the various tools for transaction monitoring, risk scoring, anomaly detection, and then how to visualize and communicate those findings to different types of stakeholders, technical and non-technical. And then they need to also understand intelligence and threat analysis, because we're seeing a lot in terms of state-sponsored cybercrime, sanctions evasion, and illicit finance happening through crypto networks. And so professionals need to understand geopolitical risks. How are they going to identify emerging threat actors and typologies? And then the use of OSINT, open source intelligence, alongside of blockchain forensics, right? So we're talking about off-chain and on-chain information. And then finally, I would say governance, ethics, and risk culture. They're going to need to be able to shape those ethical frameworks. They're going to have to be part of that conversation. They're going to want to advocate for responsible innovation, like we talked about ethical AI. And then we need to have a culture of compliance in both our centralized and decentralized organizations. So that involves several different elements. And I think the critical element here too is we need to train our compliance officers, but we need to also train the authorities and our law enforcement officers as well. So that's also really important when it comes to working together, because compliance officers can know everything about blockchain analytics and this new environment, but so too should the folks who are prosecuting on the front lines. Thank you.
Thank you, Archana. This is one of the comprehensive checklists. I mean, I'm scared if I get interviewed for all those things, then I need to ensure that I have all put together. But to make it simple and just in a layman's language, I would just tell my audience, as per what I've understood from the conversation today. So, blockchain literacy meets regulatory fluency. Add a flavor of Excel mastery, and you are hired. I mean, that's what you need, an investigative mind that can help you, transcend and understand what things are going in the mind of the fraudster or the bad guys, because you need to think like them to understand and combat all the aspects. It can be the behavioral trends or maybe the different types of scams coming up in the market. So yes, you need to have the blockchain literacy before you get into the water, or you need to jump into something that is a big domain where you do not know what's coming your way. Absolutely agree with all of you on that. So my next question would be to Robert in terms of the institutions. When I see that you come from traditional banking, so how do you see or I would say, how can institutions evolve their culture and talent models in terms of engaging meaningfully with the decentralized systems without losing control over risk? Because we do see a lot of things now getting into the AI and machine learning stuff. So when we hire, I would say significantly when we look into different pools or the talents that we acquire. So what is it that you would like to see in them, or how do you want them to evolve in terms of just avoiding or mitigating the risks associated to the industry that we are in these days?
Sure, sure. And I think it's going to be thematically pretty similar with what we just heard there, right? Uh, Translation is how I think about it. So again, it's multi-skill sets that can talk about risk management from different perspectives. So traditional finance, I think about how to build and reframe a traditional financial institution's AML, sanctions function, so that it's prepared for the next 5 to 10 years. And what I mean by that is almost reshaping the way that the program is set. And I know I talked to a lot of my peers and some traditional financial institutions, not only in the US, but in some other jurisdictions, right? How do you embed data engineers and data architects and data scientists into your functional teams, right? AML and sanctions teams in traditional financial organizations are mostly structured the same way, right? You have your transaction monitoring, you have your KYC, you have your sanctions, you have, right, a variety of these, for lack of a better way of saying it, silos. But how do you embed people who can think about data, who can think about tools, who can think about whether it's supervised machine learning, RPA, or more advanced AI, modeling, so that they can engage with the actual users who maybe have more of the traditional backgrounds, so that you can build towards a solution that is compliant, right, with what we've said, everything here: auditable, trainable, repeatable, consistent. So, I think a lot of traditional financial institutions are really trying to figure out how to build that, if they haven't already, and how to migrate into that new model, right? How do you, instead of hiring somebody and immediately, pulling from the same skill sets, how do you bring in people with these different techniques and talents? Because you can teach people AML, you can teach people sanctions, you can teach people anti-fraud, right? But it's much to teach people how to code, or how to build something, or how to really unwrap, right, supervised machine learning. So that, I think that's how traditional financial institutions are really starting to think about it. I know, we are. I'm big on partnering with the right third parties and having a geographically diverse workforce. So, right, my team, it's over 200 people. It involves some third parties, some full times, in 5 different countries, right? It's the access to open source information and intelligence. It's different in the US versus Europe versus Asia, and different jurisdictions may have different information available to them to make the intelligence that much more, impactful. So those are some of the things that I think about, some of the things I talk about with my traditional financial institution peers. But I think if I can give that advice to folks in the audience that are in, virtual asset companies or fintech companies, I noticed several that are on here, right? Don't lose sight of bringing in traditional mindsets to your market, right? Regulators, law enforcement, folks, traditional financial institutions, because they're gonna help you navigate how to be compliant, not only now, but as those expectations continue to evolve and grow, and they can kind of keep that core discipline in place, because that's important. You know, it's one thing to be advanced and full and you know, aggressive, but if you lose focus of those core elements, right, that how fintechs and larger virtual asset players tend to have some challenges, right? So that can be very helpful for them as well.
Thank you, Robert. And I believe if we are moving from traditional banking to the dynamic banking, then we do need to have the talent pool, which is dynamic and does transition as per the requirement, the things changing with the changing world and the times and the technology that should be. So that's all from today. So I would just say that in terms of the questions that we asked and the things that we've discussed today, that was really very insightful. And thank you so much for our brilliant panelists, Archana, Robert, Prasenjit, for the insightful, energizing conversation. If today proved anything, I would say it's just that blockchain isn't lawless. It just requires a new legal dictionary. Maybe a compliance in Web3 isn't a contradiction, it's a new frontier. So, to our audience, thank you for joining us. Keep asking smart questions, stay curious, and remember, while crypto is decentralized, trust and transparency still need structure. So, I hope you did understand what we discussed and what we talk about. Thank you once again, everyone, for joining in.
Thank you.
Thank you
You're
so
welcome.
much.
Thank you.